Hello everyone. Welcome to this Mutual Funds podcast with Mere Asset Share Khan. My name is Nivedita Roy. This January, Samco Mutual Fund is launching a brand new mid-cap scheme that employs the momentum-based strategy. We're joined by Mr. Pankit Shah, the Chief Business Officer, to understand how the scheme works and, of course, what it means for you as an investor. Let's get started. Welcome to this podcast, Mr. Pankit. It's really great having you here today.
Thanks, Nivedita.
So, Mr. Pankit, our viewers would like to know about Samco's philosophy and approach to investing. To my understanding, it's rule-based, algorithm-led, and which is very different from the conventional star fund manager culture in India. So, could you please tell me more about this and why Samco employs this kind of philosophy?
That's right, Nivedita. What Samco does is completely different from what the industry does. If you actually look at the mutual fund industry, in India we have a fund manager cult. People believe that the fund manager's ability to cherry pick stocks helps them generate outperformance. What we do at Samco Mutual Fund is 100% algorithm driven based investments, which means that we only look at data and decide what is right for the investor to buy. So if you actually look at the entire process of fund management, there are 4 aspects towards fund management: what to buy, when to buy, how much to buy, and when to sell. All these 4 aspects of fund management are 100% algorithm driven at Samco Mutual Funds. This process helps us eliminate emotional bias from the entire process of fund management. The reason why we do this is again backed by data. So if you actually look at one of the most prominent fund managers in the world, it was a guy called Jim Simmons. He managed funds from 1988 to 2018. During that 30-year period, he generated 66% CAGR, which in my view puts him amidst the top performing managers. That's the reason why we do algorithm-based investing, and he remains a true inspiration for us.
So, Mr. Pankit, Samco follows a momentum-based strategy across its equity and hybrid schemes. Can you tell us what the strategy is for our investors and also why Samco uses this strategy?
So, Nivedita, if you actually look at what we do is momentum-based investing, also popularly known as trend-based investing. It is based on the core belief that stocks which are in favor will continue to remain in momentum for a prolonged period of time. Once they move out of momentum is when we knock them out of our portfolio. This is quite contrary to the traditional approach of growth and value investing. The reason why we do momentum-based investing is because of empirical evidence. So if you actually look at the broader indices, Nifty 500 has generated 13% CAGR for a period of 20 years. At the same time, Nifty 500 Momentum 50, which is a momentum-based index, has generated 21% CAGR, which is an 8% outperformance compared to the broader markets for a period of 20 years from 2005 to 2025. This is why at Samco, we choose to do momentum-based investments.
Samco is launching a mid-cap NFO on 21st January. Could you tell us about the core idea behind the scheme?
So Nivedita, this is India's first actively managed 100% momentum-driven mid-cap fund. So if you actually look at the broader markets, mid-cap has been a consistent generator of strong returns for investors. Over the last 20 years, the mid-cap index has generated 18% CAGR compared to 16% which the small cap indices have generated and 15% that the large cap indices have generated. So there is merit towards mid-cap investing. Interestingly, within the mid-cap segment also, there is a passive momentum index which has generated 23% CAGR for a 20-year period. So momentum investing within mid-cap generates an outperformance of 5 to 6% compared to the broader mid-cap index. That's why Samco is launching a 100% momentum-based mid-cap fund.
Could you tell us more about the unique positioning of the scheme?
So as I mentioned, within the mid-cap space, momentum works, which is truly reflected by the passive momentum index. Samco's mid-cap fund is uniquely positioned because we adopt our own proprietary care momentum strategy, which looks at cross-sectional momentum, absolute momentum, revenue momentum, and earnings momentum. While the passive index only looks at price performance, these four parameters will help us generate strong performance. Also, what is unique about Samco's mid-cap fund is this will adopt 20% hedging to protect downside during bear cycles.
Now that we've understood why Samco follows a momentum-based strategy and how this particular scheme is positioned, can you tell us why investors should consider mid-cap exposure today given the current market conditions?
So Nivedita, 2025 has been a tough year for the Indian markets.
Yes.
If you actually look at our market performance compared to other emerging markets, India has underperformed the emerging market index by 20% over the last 1 year. Also, if you actually look at the mid-cap segment in particular, valuations have come off. The mid-cap index PE, which was at about 45 about 15 months back, has now come down to 36. During the same period, earnings within the mid-cap segment have gone up by 37%. So clearly, valuations have become reasonable compared to where they were 12 to 15 months back. Interestingly, this is also a period where momentum as a style has not worked. So if you look at 20-year data of 1 year rolling return, momentum as a factor underperforms the broader market for a maximum of 12 to 14 months. We are closer to that period of the current underperformance cycle, which creates a case why one should consider momentum-based mid-cap investing now.
Mutual fund investments are subject to market risk. Read all scheme and related documents carefully before investing.